Go over to Nigeria, and its stock market lost in excess of $8 billion in January as investors took profit and divested from the country as its currency, the Naira, continued to weaken. Now, the market has been on a sustained downward trend since late last year when foreign portfolio investors began pulling their investments to seemingly better business environments. Now, market capitalization decreased by about 16.5%. The all-share index also fell by the same value. And of course, the volume of shares traded within the period also dropped by as much as 2.58%. All the figures released by authorities of the stock market point south compared to the same time last year when Nigeria was a haven for foreign investors.
The productivity of the Nigerian economy today is very low. There are a lot of skepticism about even tomorrow. The currencies are down. The financial system cannot even boast of even a policy that will rejuvenate the economy fast enough as expected by the political managers of the economy. And so there is no way you cannot but expect the kind of low performance and falling indicators in even the Nigerian capital market as we are having it today.
Now, joining me in the studio to delve into Nigeria's market loss so far this year is Deji Badmus. He's joining us from Lagos. Now, Deji, some traders say volatility in the market and, of course, a selling pressure at the NSE were driven by capital flight, mainly because of the dominance of foreign participation in the markets, of course, in the past 4 years or so. Now, is there a way the NSE could have been cushioned from these major losses?
Well, Uche, most analysts will tell you that there was somehow there was little the NSE now, especially authorities of the NSE, could have done to cushion the effect, because basically what happened, as Samuel explained in that soundbite there, was somewhat beyond the control of the NSE. I mean, you know, you talk about the issue of capital flight. There was basically little or nothing the NSE could have done as a result of the fall in the price of oil, of course, which necessitated those measures that the CBN took to control, those measures now to control Forex. I mean, we all know that, you know, investors, especially foreign investors in the capital market, decided to take a flight after they were not so sure of what the policies are with the Nigerian currency. So a lot of people will tell you there was little or nothing the NSE could have done, that if monetary and fiscal policies were put in place, and the right ones actually were put in place, what you saw with the stock market would probably not have happened, Uche.
Well, Deji, the CEO of the stock exchange, Oscar Onyema, he actually gave his outlook for the market this past month in January. He said uncertainty and volatility dominated the forecast for 2016 and, of course, beyond. Now, what is his strategy to revive investor confidence in Nigeria's market? He mentioned working closer with government. Can you give us a picture of what he said exactly?
Well, basically, apart from working closer with government, what the NSE DG is trying to do now is to win investors' confidence. And we're talking about local investors now because, you know, some analysts have actually advised that the NSE should try to win local investors' confidence that is not there, and that when you have local investment in the stock market, you wouldn't have the kind of shock that the market had when foreign portfolio investors decided to take a leave. And part of what the NSE has been doing is to introduce some measure. For instance, there's what is called the STP, that's a straight-through processing that ensures that people basically get, you know, investors get, they get cash paid directly into their bank accounts, unlike what we used to have in the past, where stockbrokers would actually take control of the process, and you know, you trade in your stocks. It takes a while before you get the proceeds from that. Now you have a system where, you know, trading is done, you get the cash paid directly into your bank account. That the NSE believes will, you know, boost investor confidence and convince people to come back, especially after we had the last crash in the stock market about 2 years ago. There's also the dividend mandate payment system that the NSE has introduced, as SEC has actually introduced. you know, unlike in the past where it's always difficult to get dividend, we have this problem of unpaid dividend. It's still a problem there. Now the NSE is trying to eliminate that, and by introducing this e-dividend payment system, the general impression is that with all of these measures that the NSE is taking, investors, especially local investors' confidence now will be boosted, and people will want to return to the stock market, because actually it's difficult to convince a lot of people to come back to the market after that huge crash we had in 2014.
Well, Deji, thank you so much for those insights. Of course, Deji Badmus joining us in Lagos. And